Hey everyone, this is Rahul with the Alternative Investors Hangout, and today we have a new guest on. He is Chris Marchese. He's over there at the Morgan Report. Thanks for coming on again, Chris.
Thank you. It's good to be here.
Okay, today I've been noticing a lot of news coming out of Cyprus. It looks like there's going to be some sort of bail-in, some may call it a bailout, and it looks like many individuals can only take out $100 per day. Capital controls are going to be implemented. How do you see this Cyprus event? Is this going to spill over all over Europe? And how do you think it's going to affect gold and silver in U.S. dollar terms?
I don't think it'll spill over into Europe. However, a lot of Europeans and the Russians, in fact, have quite a bit of money parked at Cyprus banks, so that should be bullish for the metals because investors, they're not going to trust their banks, and there'll be a fear that this can happen elsewhere, and they wouldn't be wrong in thinking that. So, overall, I think it'll be bullish, although the degree to which is rather difficult to quantify.
So you're saying that, number one, if you're looking at the rest of Europe, it's not going to spill over, but you have to see that if it's happening in Cyprus, it's going to happen maybe, in my opinion, it could happen in Greece, and then it's going to go over to Italy and Spain. The reason why I say that may happen because if you have a lot of rich people getting screwed over in that country, then why not in other European countries? And then it could happen in Britain, it could happen in Germany, and then finally the United States.
Yeah, well, anything could happen, as we all know. The reason I'm hearing out of a lot of these countries why it wouldn't be put into effect elsewhere is because Cyprus makes up for such a small percentage of the total Eurozone GDP that it really doesn't matter. But, crazy things are happening every day, so, it wouldn't shock me if it happened in, say, Spain or Ireland or one of those countries.
Moving forward, I wanted to get into another topic regarding miners. Jason Barak, one of our mutual friends, he told me that you're a mining expert. And the thing is, many big caps are getting slammed right now, and a lot of junior mining companies are getting slammed as well. Since you're the expert in this, why are these miners getting slammed right now?
Well, that's actually a very difficult question. I think a lot of the reason the large miners are getting slammed is severalfold. One is operating costs or input costs are rising rather precipitously, and capital costs, the cost to construct a mine and maintain a mine are rising far faster than all these companies had initially forecast. So that's putting downward pressure on them. For example, Barrick's world-class Pascua-Lama project is running billions more to construct than they initially projected. So that's definitely hampering them. Also, a lot of the large miners are like Gold Fields and Anglo Gold Ashanti are based in Africa, and they're being penalized just because of that. Basically, and another reason is the rise in gold price we've seen over the past few years isn't necessarily translating to the bottom line and increased dividends, although it has to some degree, but not nearly to the degree that one would think with $1,600 gold. And this is definitely spilling over into the smaller miners, especially the exploration companies, because they're running out of money, and the financing markets for all of those are they don't want to do it. So I think a lot are going to go under in the before the end of this summer.
Speaking of the miners, there are many individuals saying that, hey, there's market manipulation. I don't buy that to a large degree. Sure, there could be some manipulation in the market, but do you believe that some of the reason why these miners are also getting canned is because you have ETFs compared to the 1970s, where all these dollars are going into the GLD or the UGL, the double leverage gold fund, and then the AGQ as well, rather than going to these miners? Is that a problem as well?
Oh, definitely, because it's taking capital that would otherwise be put in these miners in order for individuals to gain exposure to the underlying metal. One option that investors should consider if they don't want an ETF because it's paper and they don't want to take on all the risk of a typical miner, are the royalty companies, which we're very overweight in, which includes Silver Wheaton, Franco-Nevada, Sandstorm Gold, and those type of companies, where their input costs are fixed and they have no ongoing capital costs.
And those listening just want to make sure that if you're going to put money in those stocks that Chris talked about, do your own due diligence, just as a disclaimer. But getting into gold and silver again, it looks like it's been in a consolidation mode, especially with gold. It got whacked down from 1920 an ounce to 1606 or 1606 right now. Silver from 50, then it went down to 26. I think it's hovering around 28 or 29 right now. Will gold and silver continue to be in a consolidation mode for the next few years? Because if you look at the dollar index, right now it's strengthening because all the countries are debasing more than the U.S. right now. And also, do you see maybe a super spike in silver within the next few years?
Let me first talk about the U.S. dollar index. It's just the U.S. dollar compared to primarily the euro, the British pound, and the yen, the Swiss franc, which is pegged to the euro to some degree, and I think the Canadian dollar. So it's just measuring garbage against garbage. So as we've seen over the last few years, gold will continue to go up, even with the dollar index staying the same or even going up. And as far as the consolidation goes, we think we've bottomed. Although, we might continue to consolidate until the end of summer, but we think we'll start to pick up before that due to a number of reasons, including Cyprus, the fact that the U.S. monetary base is, growing at $85 billion a month, and the metals seem to track the growth in the monetary base pretty well, and that has just started to grow. So we should see a follow-through with the metals, if history is to repeat itself. And also Japan is going to engage in monetary debasement, more than it has in the past due to the appointment of Kuroda as chairman of the Bank of Japan. And he's openly said he plans to weaken the yen against the dollar. And we also expect other issues in Europe to arise, which will be bullish for the metals, such as bailouts of some of the big countries, like we've seen over the past few years. So really nothing's changed. These consolidations are normal in a bull market. Yes, it's been discouraging, and this one's been fairly protracted. but we think that's coming to an end, and the mining equities are just more attractive than we've ever seen them. Over the last 10 years, the gold to HUI ratio has only been above 4 for 47 trading days, and 37 of those have come in the last 9 months. So this is when you want to buy, when there's a lot of blood in the streets and things are trading at extremes, which they are now.
Yeah, one thing I wanted to add regarding the dollar index, if you look at it, obviously it's a basket of fiat-based currency. The euro consists 57% of that, and then the yen 10% around, and then the British pound around 10 to 11%. So roughly that's close to 80% of three garbage fiat-based currencies. So that's why I think the dollar is going to continue to strengthen, even though it's a piece of crap in my opinion. But getting into the last topic, I wanted to look at what the price of gold and silver will be at the end of the bull market. I've interviewed many individuals, and they've been concluding that it's going to be around $5,000 to $10,000 an ounce. Peter Schiff has also said this because we're going to go back on some sort of gold standard, whether it's fractional reserve based or not. I don't know, probably. Do you see something like that happen, $5,000 to $10,000 an ounce? Right now it seems ridiculous, but it could end up happening.
Oh, I think that's going to be easy, although that it sounds nuts. But we're stuck between a rock and a hard place. We can't tighten in or take in all the excess liquidity, otherwise it would cause interest rates to rise. And then our cost of servicing our gross federal debt would skyrocket, and then we would have to print more money in order just to be able to service that, and which in turn would cause our deficit to just go through the roof even more. So basically, there's to put a certain price target on gold and silver is kind of a fool's errand, because all fiat currencies have collapsed sooner or later. So it's best measured against, say, another commodity like oil or something they can't print.
So when do you think this market's going to be over? Is it going to be when the Fed just completely loses control of printing money? Is it going to be higher prices? Is it just going to be a new currency that's introduced? I know it's really difficult to project, but what are you thinking?
It'll be when they can't manipulate interest rates anymore. Interest rates will have a life of their own, and the market will decide them. The Fed, no matter what they do, won't be able to keep them in check, and that'll lead to the bond bubble popping, and in turn the U.S. dollar.
All right, Chris, before I let you go, how can people follow your work?
There's a few ways. You could go to silver-investor.com. And we also started a new website, which is research-based on resource companies, not just mining companies. That's richesinresources.com. That's richesinresources.com. Or you can send me an email at chris@silver-investor.com.
All right. Thanks for coming on again, Chris. Or thanks for coming on, Chris.
My pleasure. Thanks.